In this video, I want to take you through how to choose a currency pair or other instruments to trade with. It is very important to have an idea, that is a grounded idea of how to actually pick an instrument that you want to trade, because the decision starts from the very instrument that you are interested in trading or investing in. So I will take a bit of time to explain the things or the fundamental things that one has to do to be able to pick the best trade, or to be able to pick the best currency pair or the best instrument or the best asset to trade with. Okay, so let's take the platform. Alright, so basically you'll find out that in the previous lesson, when we were looking at the golden rules we placed these trades based on the rule that the Euro USD is going up. You can see it's already in $100 and something, and the Euro card is also going, and we are still waiting for the rest to also take their sell positions. All right, now we want to go further. All right, so let me take a bit of time to explain how to choose a currency pair or an asset properly in order to have a winning trade. To have a winning trade is when you are able to select the best moving trend of a particular currency pair or instrument from your analysis. It's obvious that this very topic is the starting point of decision making and the practice of discipline in the market. The various things that I will advise you to follow must be followed exactly if you really mean trading business. You need to be very patient, or you need to be patient enough to check everything vital to placing a trade before you go ahead with the trade. In forex market, once you make your investment or once you place the trade, there are only two things that can come out, and you can that can come out, but you can only get one of them. In forex, when you place a trade, there are two things that happens, and you can only get one of these two things that happens. You may have a winning trade, which is profit, or a losing trade, which is a loss. Either depends on how you pick the currency pair or the instrument or the asset that you are actually trading on. It therefore demands attention. To how you actually pick a currency pair or any other instrument. So everything that we'll be looking at here, I will urge you to always and at any given time follow these things before you place a trade. For example, driving a car has rules to follow. It is the same thing in the forex market. The forex market also has its own rules that must be followed. I am actually talking more here because this is very, very, very important. The failure and success of trading is here. It starts from here. It starts from here. It starts from here. Even those of us who have been trading for long, sometimes we make these mistakes and we don't check all these things. And that is why I am urging you to make sure that you follow all these things. Alright, in order to choose or to select a particular pair, the first thing is to select the major trading pairs, at least 4 of them. That is, select 4 instruments. For example, for example, you can say that Euro USD, GBP USD, AUD USD, and let's say USD JPY are your major trading pairs or your major trading instruments. Now that you know your major trading pairs, you should also have the minor trading pairs. So you may probably choose another 4 or 6 pairs and have a record of them, that they are your minor pairs that you will be trading on. The pairs are many. You can't always be trading anything. You need to have your major instruments that you trade on, and then your minor ones that you trade on, so that you don't become too biased in the market. Alright. So if you choose, say, the first 4, your major 4 pairs or instruments that you want to be trading on, you have to determine the one with the best probability of profiting using all the 3 types of analysis that I will be talking about. If none of the major pairs look good for placing trades, then you can move on to the minor pairs and analyze them the same way before placing any trade. This is what professional trading is all about. The professional traders, hedge fund managers, the bank traders, and all the best retail traders, this is what they do, or this is what we do. So you should be able to determine the instrument that has the best probability of profiting before you actually go ahead to place the trade. So it means that some analysis has to be done here. Some analysis has to be done here. If, say, we take this pair, though we have used the rule, okay, we can use the golden rule and place the trades, but there is more to it. There is more to it. So we have to check the other analysis. The fundamental analysis technical analysis and sentimental analysis are the basic analysis that we always have to do each time we want to place a trade. So I'll be talking briefly about uh, these three analysis. We are still looking at the trades that we placed earlier on here, and the Euro USD, we can see is still making profit. The Euro card is still making profit. The other two are still in running losses. So here you can see that the more, this is it, Euro USD, the more the price moves up, the profit also increases. Even here on Euro card, you can see that the more the price rises, the more the profit. Alright, we'll be checking as we continue with the topic on how to choose a trading instrument or a tradable instrument. Like I said earlier on, there are three main types of analysis: fundamental analysis, technical analysis, and sentimental analysis. If you read the book Common Foundation to Trading Forex Successfully, that is attached to this tutorial, you will see more there and understand more, but I will explain everything right now. Let me start with the fundamental analysis. The fundamental analysis, which is the interpretation of statistical reports and economic indicators such as news from various currencies across the countries that are released, interest rates, data, employment and unemployment reports, latest inflation indicators, consumer price indexes, non-farm payroll, housing permits. There are a lot. All of them among many which can be considered as the market news or data release, all fall into the realm of fundamental analysis. This is to say, in fundamental analysis, currency market centers around macroeconomic data, which is focusing on interest rates and expectations. So we need to understand how they work, or we should be able to interpret them. So that we can use them well. I will be explaining them in the later part of the tutorial. I'll be explaining them. Alright. We can therefore say that one has to analyze the daily news reports which are released each day for the analysis. Simply, fundamental analysis is all about assessing the news or economic data released to see the strengths on one currency of a country to the other and speculate with the measures. There are a lot of websites that we can get this news from. These news can be found on dailyfx.com, forexfactory.com, um, forexcrunch.com, even on Yahoo. Among Yahoo Finance, we can find such information. Even the broker, some brokers send some of this information to our emails, but it's best you know how to go around them. Alright, for example, let's just check. Okay, I'm just logging into I'm just opening a browser so that we can go to Forex Factory for me to explain something about the fundamental analysis. So let's go to www.forexfactory.com. So let's just go. I want the calendar. Alright, so here we are on forexfactory.com. All the news releases are there. For example, today is Friday, April 21st. So you'll find out that all the news that were released today are all here. You can see them. Okay, this time is not okay, so it's easy. You just click here and then it will pop up sorry, it will pop up the time, and you can match it automatically and then just save it and it changes. So all we need to do is to go back to calendar. Just to go back to calendar. Alright, so we are back here on calendar bar. Okay, so these were the news that happens during the day. So all we need to do is to trace the day and the date. So today is this date, so all the news that came, we can see them. So what it means is that you have to be ahead. So let's say for the following week, the economic news, they are already there. The time that the news will be released, the currency on which that news is related, and the type of news that is coming. So it's just for us to know the time and the type of news and know the impact, and then it will give us a clue as to what we should be expecting. Alright, so basically this data is fundamental. This data is fundamental. So when we say sorry, when we say fundamental analysis, what it means is that we are looking at a previous data that was released against the forecast and the actual that is released, so basically this is what we use. So if the previous is weaker than the actual, then it will strengthen the currency. If the previous data is stronger if the previous Okay, I don't want to confuse you now. Okay, but then if the previous data is weaker than the actual data, then that currency pair will be strong. But if the previous was stronger than the actual, then this currency may be weak, depending on other external factors. Okay, but I will be explaining this into detail. So basically, these are the fundamental news, or this is the area where we do the fundamental analysis to be able to know whether the currency pair, particular currency, will be stronger than one, to know how to pair them. The second analysis is sentimental analysis, which is mainly focusing on identifying and measuring the overall psychological state of all participants in the market, which means all traders in the market. Sentiment analysis actually tries to quantify what percentage of market participants are bullish, that is buying, or bearish, that is selling. Once the majority sentiment is identified, a sentiment analysis will often take up a position on the opposite side of the trend with the assumption that the crowd is wrong, or the crowd is getting tight, and a reversal may be possible. Sentiment analysis is a contrarian technique depending seriously on bull or bear ratios and some other sentimental indicators. So it's important that we understand the mindset of other traders, which is easy to detect using other indicators. Sentimental analysis is more often used in conjunction with technical analysis and fundamental analysis to add more depth to a trader's understanding of the market. It is never safe to use just one type of analysis to make a decision. We can now look at technical analysis, which is the most significant analysis because it encompasses all the other analysis, and that is why till today it remains the most strongest way of analyzing the market. So what it means is that after your fundamental analysis, sentimental analysis, you end your analysis with the technical analysis. So you end. Though it's broad, I will try to summarize it to a straight point. Alright, technical analysis is it's where a trader studies the historical changes in price actions in order to recognize predictable patterns that occur. Right? Technical analysis mainly depends on charting and identifying chart formations. For example, we were looking at the golden rule, so we use the chart to trace and say that this trend is buying, and that is why we place this trade. You can see here we place this trade, and it's buying, and that is why we are in profit. Okay, and the same thing to this, right? That is why we are in profit of this $200. So we entered here, and then now we can see that it's in profit. So it's just a pattern. We're just following the chart, the charting, the charting, right? And we were able to see the formation that it's going up, coming down, going up, coming down, going up. So it's a buy trend, and that was why we bought. And then we were not wrong, because we can see profit here. All right, let's go on. By analyzing chart formations and patterns that follow them, you can try to work out a trading system that has a higher probability of making profits, of making profitable trades when certain patterns appear in a price action chart. Sorry. Technical analysis involves the use of different indicators on the trading platform to recognize chart formations, which of course are historical. So what it means is that technical analysis is based on using historical chart patterns to predict or speculate the future movement of the price of a particular instrument, be it currency, be it minerals, be it indexes, or any other instrument. So we can actually say that technical analysis is actually the art of identifying a price trend reversal at a relatively early stage and riding on that trend until the weight of the evidence shows or proves that the trend has reversed. It is important to know that in technical analysis we are dealing in probabilities, never certainties. The hopes and fears of all market participants are reflected in one, which is the price. So we are all chasing the price. In forex, what we trade is price, so our focus is on the price. Where is the price going? Is it falling or is it rising? If it's falling, we sell. If it is rising, we buy. All right, let's continue with the technical analysis. I really want you to understand and lay a ground or lay a solid foundation on the technical analysis. Before we move on, technical analysis assumes that prices move in trends, and these trends have the tendency to perpetuate or to continue over a period of time. There is no known technique for determining the duration and exact magnitude of price movement. It is the fact that we can only see or recognize a change in direction of a trend or a price. It doesn't really matter what time frame you are following. The principle of technical analysis remain the same or constant at any given uh, uh, time. The only difference is that the longer the time frame, the greater the significance, or the greater the importance of any given trend is. To say that if the trend stays there for long, then its reversal, it's possible at any given time, because prices don't actually move in one direction. Even if they are going in same direction for a long time, they will reverse. They will make a temporal reversal before continuing. It doesn't really matter what instrument you are following, the principle of technical analysis remain constant. So all that matters is that you understand it, and then you use it well. Okay, we can see here that it's important to do this analysis on all the major pairs or any tradable instrument first before deciding on those that have highest probability of profiting. Then we can trade those ones. When we do this, or when you do this, it helps you to make the right speculation on the price movement. Once you are convinced, then you can choose the currency pair or the tradable instrument to trade on. Many novice or inexperienced traders think you can just choose a pair and place trades. It doesn't work that way. You must always and anytime perform these analysis to select your pairs to trade with. And I would like to caution you here that choosing your currency pair or instrument to trade with is not all, but just one step towards the decision on what to trade and when to trade or place, or when to place that trade. You will have to wait for your signal to mature before you actually place the trade. We will look at that on the subject of indicators, which helps us more on the direction of the price, or in speculating the movement of the price, or speculating the price. This also becomes your plan to trading. As the saying goes, plan your trades and trade the plan. What it means is that you will know your entry point and your exit point. Sorry. So at this point in time, someone may ask, how do we now choose a currency pair or other instruments to trade on? It is simple. What it means is that you will have to do all these three analyses before selecting a particular trade or a particular tradable instrument to trade with. So let me just give a brief summary of all that we have actually looked at in this very tutorial. The first thing to do is to have your major trading pairs. You can choose 4, you can choose 5, you can choose 6, depending even on your capital and how often you want to trade. These are the instruments. These are the instruments. The instruments are here. The instruments are here. The instruments are here. And it's important that you have some major pairs that you trade over time so that you can master their trends, how they move, and then also have minor pairs that when your major pairs are not really moving or haven't given you any good signal to trade on, you move on to the minor pairs that you have. So you actually need to have a journal to have record of all these things. All right, so let's say you have Euro USD, which is here. You have to first do your fundamental analysis. What it means is that you on that particular day you go and check. Let's say it's a Monday, and let's say it's a Friday. You will come and check whether there is any economic news on Euro. So here we can see here Euro 8 a.m., Euro 8:45 a.m. So what it means is that and even 11 something here. So what it means is that in this very day there are economic news on Euro. So you are already informed. All right, then you also have to do your sentimental analysis, and then lastly you do the technical analysis. And I said earlier on that you will have to do fundamental, sentimental, and technical analysis, but technical analysis is the main thing, because technical analysis includes fundamental and sentimental in its analysis, and that is why it is the most powerful method of analyzing prices. So once you are able to find the best trend, then you stick to it. But we'll be looking at indicators. When we look at indicators, you will find out that it will be more clearer to you. Remember, there is no hurry. We are trying to make sure that we understand everything before trading. And so as a student, you learn in batches, and then you increase in knowledge. And I believe as you practice these things that you are learning, there is no doubt, there is no single doubt that you are going to make money in abundance. You are going to make money in abundance once you observe this simple rules. You will do the right thing, and then you will make the good money. So we will continue with the other topics. So you find out that one topic links to the other. One topic links to the other. So I will advise that you learn or study the videos in the arrangement in which they are. Thank you.